Steve from MarketWizards.com and eMiniWizard.com, reminding traders to use risk capital you can afford to lose if you're playing this game. About 15 minutes left. Trying to identify areas of potential retests. This would be a retest right here, the highs from Friday. It's a 5-minute chart. Sometimes we can get through 2 or 3 lines, but very hard to get through them all. We saw what happened when that happened on Friday and then regained the territory and pushed back up. I'm still thinking this is fairly neutral, that this is backing and filling. One of the charts that I'm looking at is this 5-minute chart. Primary trade so far has been down. And obviously convenient traders long side are trying to short, come back for the half gap at 11 and a half. The angel test, 10 and a quarter. I've got the print range different from the true range. We'll talk about that again. And I'm suggesting anybody that is trying to buy using the aggressive zone of 08 to 05, think about it just as a scalp with a 2-day trend. Think about it as neutral and think of it very aggressive if you're trying to buy above the gap. Game plan, try to get a couple of points here and there and get 4 to 5 points per contract by the end of the day. Try to get your VIG. If your VIG is, try to get, well, let's pick a number. You pick a number that makes sense for you. Can you live on 5 points a day? Well, it depends on how big your account size is. Let's say your goal by the end of the week is to capture a measly $100 a day out of a contract. So $500 for the week. That's a couple thousand for the month. Doesn't sound like much, but if you have a system where you could do that regularly, and then you were able to say, okay, I really trust my system, then you could play it, say, by 5 contracts. That's a different story. Or 10 contracts or 20 or whatever. So it's a variable of your technique, and it's also a variable of your account size. That's a very important idea that I just shared with you. So while 500 a week doesn't sound like much, if you can scale up to larger contract size and do the same thing, then the sky's the limit. You're just limited by your account size. That's why it's, I believe, very important to get your bread and butter trade ideas. And the half gap trade is one of them. A very important idea. And obviously, you guys live in California. What can I say? You're going to be taxed higher and you're going to have higher housing costs. So maybe you need a bigger account size, but the technique will work for you. Find something that you like, 2 or 3 or 4 reliable trades that you can find, and then execute them. If they don't work, okay, stop out. Don't take your garden variety trades that have very low probabilities. Take your high odds trades, the ones you don't want to take. And be happy with 2 points, and then be happy with another 2 points. Be happy with another 2. Add them up. Accumulate. Spread them out. Don't take the risk, the same price range and same time. Spread out your risk. And this is what I've got for the 2-day range. I want to take a look at this. I want to be aware of that 14, which is last week's high, last month's high. Risk and reward. Let's think about risk and reward. From the 18, got 10 points to that 28, 28 and a quarter target, and coming backwards, throw it the other way, you got 08, which substantially is Friday's high. So I think we've got several pivots to be aware of today. One of them is this 14, obviously. 12 and a half, the huge pivot in our system, is another. And obviously the 18 zone. Because on a risk reward basis, plus or minus 10 will give us either retest of that high from Friday or the new high. So that's one of the reasons why I said make sure you are paid by 18 today. And let's use 18 to 22 as our aggressive resistance zone, resistance targets the boys are trying to bust. A lot of information I just threw at you there. Takes time to absorb that. Make a couple of notes, especially if you're newer. And this was the arbitrary line that I had drawn on there the other day. Remember we talked about that. All right, let's use 08, 09 as resistance. There it is. May have turned into support. We don't know. For sure, coming back this way, you want to respect that just like you want to respect that 18. So range type trade for now. Boys have thrown the ball up in the air and then let everybody play around with these smaller trades. There's been no real solid push yet. I still like the buy side as beginning of the month bias. I like it a lot less up here than I did at 88. Remember we talked about 88 support? Much better odds back there for the buy than up here. But the concept is still the same, just the odds aren't as good. Markets are simple, but not easy. And I'm doing my best to explain to you the way I look at the market and the things that are important to me. Five-minute chart, our base chart, RTH. And it looks to me like that 05 is still supportive. If we bust that, 02's got to hold. After that, we could come back down here and obviously retest that 95, 96 area again. I'm not thinking that's in the cards just yet. I'd be very surprised if we did that. And that probably for a big boy would still be a buy. Predictive market so far has been holding that 18 zone. Theoretically, the top of this predictive model is 12 and a half. And then the extremes are above it. So that's why I want to keep an eye on this 775, 8 area right here. Factor that as part of the idea. Risk and reward is everything. I said I think 14 is going to be pivotal today. So far, RTH 13 and a half is the middle. And the reason I thought that was because obviously the 14 high, that previous high. So pretty much got their symmetry trade already in play. Range type trading has been called for. Do not think big. Think about a small range. And think about any new buys up here. Risk and reward ideas have less merit than they did on Friday. But the squeeze trade is still on if we don't close and get back in, close that gap at 05.